And welcome into Market Talk. Thank you so much for joining us and making us part of your day here today, this Thursday, January 6th, 2022. Great to have you along with us. I'm your host, Jesse Allen. Find us online, markettalkag.com, our home on the web, markettalkag.com. You can find all of our social media links there, our streaming sources. You can also find the latest news of agriculture, market info, and much more on our website, markettalkag.com. Always got to give that a plug so you can check it out any time of day. Well, we have a lot going on in the market trade here as we near the end of this first full week of the new year. Wheat under heavy pressure today. That pulled on corn and soybeans, although we did see corn finish a little higher and beans off the lows at least. So plenty to discuss. Let's say Happy New Year and bring in our good friend Bryan Doherty with Total Farm Marketing to join us here today. Bryan, Happy New Year, sir, and great to have you on for our first show together in the new year. How are you?
I am great. Thank you. It's an honor to be here. So my pleasure to be here working with you. And yeah, let's welcome in 2022 and get rid of this 21 year again, just like we did
Yeah.
last year. We got rid of that COVID and all that stuff with it. So um, here
You
we
know,
go. Yep.
yeah, and speaking of getting rid of the year, we come in here this week and we find a couple days here, kind of back and forth trade. We had a really strong day in the grains earlier in the week, but then we come in here this Thursday and wheat under heavy pressure, and that was our anchor. It felt like on the grain markets today. Just what's your overall thoughts? Just summary of
Yeah,
today.
couple anchors today, maybe three. So let's look at the wheat market. So wheat just kind of ran out of friendly news, and export sales in wheat 1.8 million bushels. That's lousy. So you had a poor export number last week, and you did in corn at 10 million, and soybeans 14 was okay, but not really what we need either. So we know it's a holiday week last week, but that wasn't, you didn't get any bullish surprises there and like, oh my goodness, look at all this stuff we sold. Didn't get that. You've got basically continued good weather in, I'm going to say, the Russia Ukraine region. And we haven't heard much politically lately either, so no news is probably negative news, that kind of thing. Um, so the wheat, it was an anchor, export sales were an anchor, and then you've got what I'm gonna call the continuous shifting sands of the South American weather forecast in that drier, region of southern Brazil, northern Argentina. Now it looks like Brazil has a better weather forecast is what I can tell at this point, so the latest models. North Argentina stays dry, for the next week, looks like it's gonna get really hot, um, you know, temperatures well above 100 degrees, lack of rain. So that's your supportive factor there. Um, Yet the market kind of paused. They got $14 resistance on beans. We hit 13.99 yesterday, so 14's an even mark. A lot of trade indicators, technical indicators were kind of pointing to this area. So the market's now got there. Now what? So it needs to probably wait a little bit more for price direction. And then the next big thing that you'll have out besides weather, Jesse, is the USDA report next week. That'll be out on Wednesday, the 12th.
Yeah, that's going to be a big thing to watch. On the weekly export sales and shipments, Brian, I've heard some people try to make the argument that, well, it was a holiday week, so it's a kind of an anomaly for the numbers, and you really just kind of got to toss it aside. Do you agree with that or not?
Well, not really. I mean, it's just a poor number. So yes, I do. I mean, you had one day shorter, uh, but still, it just told us that the buyers were not. They're not just buying it. They're just not waiting up to buy higher priced commodities. We had rallied into. Remember last week, corn put the high on last week on the 28th. Soybeans peaked here recently. So end users are still probably looking at more hand to mouth. For whatever reason, there wasn't urgency for them to pick up a lot of inventory. So we'll see. Maybe next week we'll get some, significantly large number. There was not a New Year's holiday for the markets this year. So I know that's kind of odd, but we traded all through last week. So in theory, I'm guessing that if the markets are open, then importing countries are able to conduct business with exporting countries. So we'll see what next week brings, but not a really good number. And I'm not sure the holidays are a really good reason to maybe argue that, although there's merit to it.
Sure, sure. I was happy with the way corn especially reacted today and was able to finish with some gains on the board, and soybeans as well, bouncing off the lows. But starting with corn first, I mean, what do you think of the tone of the corn market today?
Well, a tone had been. Let's talk about themes. I think we mentioned this the last time we talked. The theme that I got from producers was into the end of the new year. Look, doing nothing's kind of been good. Market's been grinding up. We're seeing ethanol push the bids. We've got good strength there. You got some uncertainty with South American weather. We don't really need the cash flow. All of a sudden, you get to the 28th, things kind of flip, and all of a sudden, the market goes from six close to 618, all of a sudden down closer to under 590, real quick. It's like, ooh. Um, but we found that farmers weren't selling the dip, so they're not jumping through hoops to sell here. As time wears on, we think that changes because of this, the logistics of when people have to move corn, make space, core bins, all of those things that are become everyday business as you head more into the year. But corn held together pretty well today. The kind of the anomaly that I'm scratching my head on here is we had 177 bushel yield, second largest corn crop in history, and we've got inverted market. And next year we've got all this concern about fertilizer and nitrogen. In December, corn can't really break the grip of 550 and running 50 cents below the old crops. So a little bit surprised that the new crop isn't more worried about acreage loss. If in fact we are tighter on inventory this year, that what's the way the market's trying to behave. So I keep coming back to this idea. It's probably a function of lack of strong farmer selling, and that does concern me each day that goes by. There's just more bushels for farmers to sell the next day.
I just wonder, you mentioned that lack of farmers selling, and I wonder if we get into this month and get into February, this is a key exporting window for US corn. This just the way that cash basis remains strong. I wonder if that's finally going to open us up to some more farmers selling, whether it be corn or even soybeans and wheat have good basis levels as well, Brian.
Yeah, you think it would. Now, maybe there's some other things we don't know. Maybe this crop just isn't 177 bushels. And some of the satellite guys, we talked about this before, they were saying this is 3 or 4 bushels less than what the USDA is saying. So that would kind of align itself with maybe these ideas that are floating around that the last 3, 4, 5 years, the model the USDA uses is just over forecasting the crop. Therefore, you had less carry in, and we saw what happened in 2019 with the late planted crop, and then we had adjustments the year after. Um, Farmers, some said, we just got to the end of summer here, and the basis was good, and we swept the bins out. A lot of people did, not a lot of storage. So maybe there is a little more to this story, Jesse, that the carry-in numbers weren't quite there, and so it makes a little more sense when you start talking about good basis at $6 corn on a huge relative to other years. Now, it was still less than it could have been, obviously, but let's say a big corn crop, that's still a lot. 15 billion bushels is a lot of corn.
That is a lot of corn. Soybean market, real quick, Brian. I know we had that big day Tuesday, I believe, in beans, but kind of just, I don't know how to take this soybean market right now. I know we're watching the South American weather worries. You alluded to that earlier here in the show, but I was happy that beans and products came off the lows today. But I'm with you. We got some of that resistance overhead, $14 on beans. I'm curious where this soybean market's going to go right now.
Well, three sessions in a row now, for whatever it's worth. But we've finished in the top half of the trading range for the day. And even today, we had a pretty big comeback. So there again, maybe farmers aren't willing to really part aggressively with their commodities this year. They kind of sense that, until we're a little bit more confident what's out of South America, why would I be in a hurry to sell? And there probably is some sense to that if you've sold half your beans, 3 quarters, maybe you're ahead of where you typically are. These could maybe be your gambling stocks, and then you look at some talk of 115-degree temperatures in Argentina. I don't know. I've heard that, but
Hmm.
it's like, well, do I really want to sell? I could look like a fool. We might be at 50 cents next week on that. So um, I think it's a lack of strong farmer selling, but at some point, this export market probably needs to pick up a little faster on its pace. because we're getting that conveyor belt closer every day to production out of the southern hemisphere. And when's the last time? Well, I guess we saw it this week, over 100,000 tons yesterday to unknown destination. When's the last time we heard big announcements? Oh, China bought a bunch of beans. We're not hearing that anymore. They're buying as needed, and they're buying. Their focus on is to try and source them out of South America.
Brian, let's switch over and talk livestock and cattle. Finally, today, getting some higher numbers on the futures trade. We've had just a lot of, it feels like just choppiness and pushing lower in cattle here this week. But what did you see mid morning that gave us a turnaround in these cattle markets here on Thursday?
I really don't know if I saw much. I think that the the market sliced through the 50-day moving average and then came back above it. So maybe that it's come down enough would be first of all. Um, Two, I'm kind of scratching my head. I thought the cash market might have a little more pop to it last week
Hmm.
and this week, and it didn't. I think I keep going back to, we said this maybe last week, that people were going to go out and celebrate and eat at Christmas and do this and that, and I think they did. I think we've got good demand, um, but it also spread the COVID, and I think maybe the market's a little worried about just how that meat might all of a sudden not move. Um, Cash is steady. Maybe you might get a little bit better this week, but probably steady to actually probably a little bit lower this week. So it just doesn't seem like the Packers are getting the interest there. Notice the availability of choice cuts. This came out of the daily livestock report. Looks like that's been on the rise. So probably some heavier cattle as well. So you've got um, that component to maybe deal with. But boy, you talk about kind of some nasty winter weather. This is the week. So I would think that I would have thought the market maybe made its turnaround today on kind of the weather.
Hmm.
It's not ideal for movement or weight gain, but it is January, so we do need to expect we're going to have these kind of events.
And we'll have to see what we have here, go through the rest of this week, get into next week, and just see the tone of this market. But maybe this was the turnaround day in cattle. It just remains to be seen. Hog market continued to be strong. That's been strong all week long. Yesterday, I know we saw good moves and cutouts and on the board, and really just this hog market is one of the bright spots here this week, all week long, Brian.
It has been, and I think the concern is on the supply of hogs with the corn price, where it's currently at meal prices now. If you look at the way the hog markets ran up the last 6 weeks, it's almost paralleled the meal market. So,
Hmm.
again, higher input costs. But boy, you look at those summer months breaching $100 today on the June and July contracts. It really makes me sort of wonder, um, what somebody who's buying $100 hogs is really thinking. Is it more short covering and people just kind of saying, "Well, get out of harm's way," or is it aggressive buying, or is it, let's just say, managed money buying baskets of commodities, and hogs are part of that. So they buy whether it's 98 or 100, they don't care. They're buying because that's their program, and it may actually inflate the price of hogs a little bit, provide opportunity for producers to really floor this thing in so many capacities. You run a stop on the market, you could hedge, you could buy puts, but real opportunity longer term to look at. It maybe, if nothing else, trying to get your risk shifted, Jesse, so that if things unravel, you're okay. You can weather it this summer.
We didn't really touch on weekly export sales on the livestock side. Hog numbers were good. Cattle really wasn't. But I think overall today, I was still just happy with the positive sentiment throughout all three complexes.
I think you have to be, and it just looked like for whatever reason, maybe it was a holiday, the importers just took a break and
Hmm.
just took a break from it. Could be, um, yeah. So bull markets, new contract highs this week in dairy, very volatile there, down the limit
Hmm.
today after limit higher yesterday. New contract highs, June hogs. Um, Beans closing in on new contract highs, still off, but the highest they've been since spring. So you've got some bull markets here, and they haven't really let up yet. Like I said, the only one that's kind of got me scratching my head a little bit is is corn, and maybe I'm just impatient. I cannot figure out why this D's corn doesn't kind of kick it in a little bit. And right now, maybe the concern is farmers are just going to stick with their rotation, not worry about planting too many beans. I might beg to differ when I talk to my seed dealers.
Sure. Real quick, you mentioned dairy. Talk a little more about the dairy market here, what you're seeing as we get close to wrapping up the week.
Yeah, just crazy volatility. You get that often as a market kind of accelerates toward the top, and everything's bullish one day, bearish the next, or you flip it over. That's what it looked like here. Now we've had really good demand, really good product prices in the butter in particular, and then milk, cheese, and even whey has come along. So you've had good sales, good exports this past year. Um, I don't think you got any real concern with like winter weather declining production. That's kind of a little more old school. I don't want to say it can't happen, but with today's bigger operations and confinements, I don't know if it's that impactful. And then today it flipped over. So generally lighter participation in those futures markets, and there's only a few big buyers and cheese and whatnot. So you're kind of some days maybe at the whim of just light volume and um, or I should say maybe heavy volume on some days without a lot of people on the other side of that ticket, and that's how you get limit up and limit down in 2 days.
Very, very true. Brian, great analysis as always. Any final thoughts you have for us on this Thursday?
Just kind of be aware. We're in bull markets. There's lots of reasons why, but I want to kind of go back. We take a look at like soybeans, and people talk about, well, the soybean market, it's got room to run. Remember, we probably lost a little bit of window on the export side because of the hurricane that went through New Orleans. So that kind of backs up inventory. Brazil planted beans quicker this year. They'll get at them quicker. You've got some good rally here. It's a pay raise. So figure out how to keep your pay raise. And we've got a lot of pay raises. The other market I'll just mention too, it's down a little bit as we speak, down 65 points, but I looked at the equity markets, and the Dow Jones hit an all-time new high yesterday. Um, these are some really historical things we're seeing, and I know it's been the trend this year, but I worry that what goes up doesn't always stay up, and there's inflationary concerns and things like that. And eventually eat away at the producers. I'm sorry, the consumer ability to buy, and those things kind of worry me a little bit. So I guess my message is don't get overly comfortable with price rallies, and just keep your pencil sharp.
Well, Brian, if producers need advice, I know they can reach out to you and the team at Total Farm Marketing. They can go to the website, totalfarmmarketing.com, or better yet, they can give you guys a phone call, can't they?
They sure can. So they go to our website. We always enjoy the phone calls, and we're not going to talk your ear off or try and sell you something, but we'll listen to you if we've got any solutions. And if we have a nice conversation, we'll see how that goes. But that's really in these market environments, really something I'd like to encourage people to do is just spend a few minutes talking with people that can maybe head you in the right direction. And that's just not me. That's not talking to when you have your management circle, that's your insurance agent, that's your lender, that's your people that help you reach your success. You're not going to talk to me about tires. You're going to talk to your tire dealer about tires. So talk to the people about marketing who deal with marketing.
Very, very true. Again, totalfarmmarketing.com or give them a call, 800-334-9779. Brian Doherty, appreciate the time. Thanks for joining us here on this Thursday, and we'll talk to you next week.
My honor, Jesse. Thank you.
Brian Doherty with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.